Hey there, everybody. Thomas Wood with Basecamp Trading. It is Wednesday, May 3rd, and we're going to talk about bonds going into the FOMC rate decision, which we just had about 25 minutes ago. Now, bonds are breaking out of this range and starting to move lower now. But what I want to talk about is the price action leading up to the Fed rate decision. Okay? And the reason I want to talk about this is because whenever you have a major announcement, for example, FOMC rate decision or non-farm payroll, which is coming this Friday, be careful trading a market before that announcement, because a lot of times it'll do exactly what bonds did today. There was a ton of volatility. I mean, we were having swings from a high up at 53.7 all the way down to a low at 52.15, almost an entire point. All right. But it didn't really go anywhere. It would break out to the upside and then pull back and break down to the downside, then retrace back up, hit the upside and pull back down, hit the downside. So what you want to pay attention to, though, is the range and how far it actually moves when these swings take place. The reason this is important is if you go back and you remember the definition of a trend, which if you don't know the definition of a trend, there's going to be a link at the end of this video that you can go learn how to read a price action trend. But the definition of a trend, remember, is higher highs plus higher lows for an uptrend, or lower highs and lower lows for a downtrend, referring to the pivot points. Well, in this case, we're putting in lower highs and we're putting in higher lows. Okay, so we have a narrowing range. So that falls into the everything else other than uptrend or downtrend. If it's not uptrend or downtrend, it's consolidation reversal. And that's what's happening. We consolidated all day long. We stayed inside of a narrowing range all day long until the FOMC rate decision came out, and then we popped out of this range, and now we're starting to move lower with lower lows and lower highs. Okay, the reason this is important is because you can save yourself a lot of heartache or a lot of choppy trades and getting chopped up in the market going into big news announcements. One of my favorite things to do is honestly just sit on my hands pre-announcement, the day of the announcement, and even in the afternoon before, because nobody wants to commit to a trade when they know there's huge pending news the next day. So just sit on your hands, wait until the market sorts itself out, gives you clarity, then go back in and say, okay, let's start to look for a position now, or look for a trade opportunity now. All right, so that's all I have for you for today. I hope it helps. Down here in the bottom right-hand corner, don't forget to click that little man to subscribe to the YouTube channel so you can get these updates every day. And also on the left-hand side, there's going to be a video here telling you about how to trade price action. So if you want to learn the definition of a trend, learn how to determine whether or not a market is trending or consolidating or reversing. It's about an hour long, great webinar for you there. So that's it for today. Have a good one. And until next time, happy trading.